I want to let you know that we want to have this be as a good experience for you as possible, for you to get the most out of it as possible. So if you use the chat box, if you use the question box, it really helps us out to know what's going on. So if you have questions, if you have comments, just general thoughts, I'm going to be asking some questions. Go ahead and do that. Amit, good, you can hear me. My voice is great. Thank you so much. I appreciate that. So we're going to go ahead and get started. Now, today we're going to be showing you a couple of things. I want to do a little bit of strategy. I want to do a little bit of technology, and I'm going to show you an amazing opportunity to put the two together. Now, first off, just like with anything, anytime you do investing or trading, risks are involved. Okay, so you want to make sure that you apply what we call as proper risk management. Never invest money that you can't afford to lose. Always start off small, or start off with a demo account, a trading account. Make sure that you understand how this works. Now, we are not CTAs, we are not commodity trading advisors. We teach people, we mentor people, we teach people and coach them, but ultimately at the end of the day, it's going to be you. Losses are a normal part of trading. There is no such thing as an undefeated season, so you want to make sure that you follow, again, proper risk management. Okay, now today's agenda, we're going to be talking a little bit, we're going to be talking about Forex, foreign exchange. We're going to be talking about some of the basics, bringing you up to speed. If you don't know anything about it, that's okay. We're going to bring you up to speed on what it is and what it means. I'm going to show you a little bit of analysis. I'm going to show you some of the very, very powerful automated tools. I'm going to show you a current trade opportunity, and we're going to talk about some a charting software, a trial, and a free bonus as well. Now, first off, a little bit about myself. My name again, I'm Steve Koenig. Just a little bit of the background. I do have my Master's of Business Administration. I've been actively investing in trading for over 25 years. I'm a former stockbroker. I've actually got 5+ years, it's probably closer to 8, of closely working with students or prospective people that want to learn how to trade and take control of their own accounts. So what I like to say is I teach people how to take control of their own financial independence. And as well, I've been a speaker, I still am. The slide right here says I'm a full-time trader. I'm actually a part-time trader. I trade part-time, but I live full-time. All I do is I'm just a full-time trader in the aspect, that's what I do for my money. Now, have any of you previously heard of MTI, Market Traders Institute? Just give me a yes or no if you've ever heard of MTI before. So I've got some of you that are definitely filling that in, keep them coming. So MTI, or Market Traders Institute, we are based out of Orlando, Florida, but we are a global company. We have we have over 30,000 students in over 30 countries. We focus on what I call is the perfect trifecta. We help people, we provide people with education, meaning world-class education, teach them how to take control. We also have the tools, we have the technology, what I call software, but I think most importantly, it's also the mentorship. When somebody becomes a student, they're going to learn some of the basics, but we work with people closely. We have weekly webinars, weekly sessions. We talk and touch base with their students on a regular basis. And the mentorship, to me, is what really makes MTI stand out. I've checked out a lot of different companies over the past 25 years, and where MTI, part of the reason that I'm here today is of their logo, their motto on the very bottom. You'll see on the screen, it says, "We never leave a client behind." And we're going to help students. We're going to work with them. We have a variety of different expert trainers and analysts and traders from all around the world working together. We've got all kinds of accolades. We've been written up. We've been on numerous business publications. Our founder, Jared, has written different books. We have all kinds of accolades. We are on the Inc. 500, one of the fastest growing companies. We were there in 2015, now again 2016, and we're expected to be again in 2017. Okay, so we have all the background, all the accolades. Now, I want to talk about Forex trading, and just so I know how in depth to get, what I'd like everybody to do for me is just type in either a 1, a 2, or a 3 on what is your current experience or knowledge trading the Forex market. So if you have minimal experience, or you've never actually placed a live Forex market, or you've never heard of it before, put in a 1. If you've traded Forex a little bit, but maybe you're not super comfortable, but you've done a little bit, do me a favor and type in a 2. And if you would consider yourself an experienced Forex trader, say you've placed, you know, in excess of 100 trades, you do it on a regular basis, do me a favor and type in a 3. So I've got Ron, I won't call out last name. So Ron, I've got you as a 1. Godfrey is a 2. Rob, good, we've got you as a 3. Experience. Hugh, I've got you as a 1. I've got a bunch of other ones. Alex, Anita, Douglas, Tracy. I see most of the people here. Carol, Sherman. It looks like most of the people. We do have a couple of 3s. It looks like the vast majority of people really are in that 1 category. So that's kind of that's okay. It doesn't matter where you're at. I'm going to provide you some very useful information. Now, what is the Forex market? I'm going to be talking about these 3 things. What is a Forex market? What is a PIP? What does it mean? Why do you want it? How to get started? So let me just go into this. First off, what is the Forex? Forex stands for foreign exchange, or they just took the first 3 letters of the first word, first 2 letters of the second word, and they put it together in foreign. And it stands for Forex, the foreign exchange. Now, all it means is that you're exchanging one currency for the currency of another. Now, have any of you, give me a yes or no, have any of you ever traveled to another country where you had to exchange your currency for a different country's currency? Give me a yes or no, because that's all Forex trading is. For example, if you're in the US and say you travel over to Europe, you would exchange US dollars for euros, okay? And then maybe at the end of the trip, you have some extra euros and you come back to the US and you trade those euros back for US dollars. Well, guess what? You just did a euro of Forex transaction. So it really isn't that complicated. So what trading the Forex means is you trade the fluctuations of the exchange rate between 2 currencies. So, and Forex always trades in pairs, meaning 2 currencies, like the euro US dollar, or the US dollar Swiss franc, or the Swiss franc Japanese yen, or the Japanese yen New Zealand dollar. So it's always 2 currencies. Now, there are many currencies out there in the world, but there are 8 major currencies that we trade. They're stable, they move, but they're fairly stable. We don't feel that the country is going to go bankrupt. So the US dollar, Canadian dollar, euro, British pound, Japanese yen, Swiss franc, Australian dollar, New Zealand dollar. We sometimes call it the Kiwi. Hopefully, most of you have at least heard of these currencies and such. Now, there's 4 major reasons that people really like to trade the Forex market. One of them is liquidity. And what liquidity means is that you can get in and out of the market 24 hours a day, literally in a second's notice. There's always buyers and there's always sellers. So you never get stuck holding on to an investment over time. So you can get in and you can get out very, very quickly. There are plenty of buyers and plenty of sellers. Next reason is size, okay? The Forex market trade does $5.3 trillion worth of volume each year. It trades more, daily. 5.3 trillion each day. It trades more volume on a daily basis than if you're looking at the New York Stock Exchange, the equities market, the futures market combined, okay? The next one is focus. Now, I have previously tried to trade stocks. I have tried to trade options, and the problem with stocks is there's thousands of companies and they have all these different news reports and quarterly reports. It's just hard to stay straight with them. And options, although it can be lucrative, you almost need a PhD to understand all the moving parts. Whereas with the Forex market, there's only 60 currency pairs out there, and we only focus in on 20 of them. So would anyone agree with me that just focusing in on 20, and on any given week, we probably only look at 4 or 6. Would anyone agree with me? Type in a Y if you'd agree that it's probably easier just to focus on 4 or 5 a week, and that's it. Okay, so I see a bunch of you saying yes, you'd agree with that. And I think the last reason is a lot of people like it is a flexibility. The Forex market is extremely flexible. It is open 24 hours a day from Sunday afternoon at 5 p.m. to Friday afternoon at 5 p.m. Eastern time. So it literally works with any schedule. It doesn't matter if you work day shift, evening shift, anything of that nature. There are no day trading restrictions. So in the United States, they put restrictions, different accounts. In the Forex market, you have a Forex account, there is no such day trading restriction. So it gives you a lot of great freedom. And you can be in a trade for minutes or hours, days, weeks, or months, whatever suits your particular investment style. And sometimes we have it where intention is to be in for 3 to 5 days, but you have a big movement and you're out in hours. It's very flexible that way. Another reason is you can open up an account with as little as $500, okay? And you can actually open up what's called a demo account with 0, and you can still do, I almost call it like live trades, but the profits and the losses you have are in a demo account. So while you're learning how to do it, if you did have losses, it's not coming out of your pocket. So you can literally start off with zero, get some experience, become consistently profitable, and then ramp up. So literally to open up a real live account, it's $500 more. So it's very easy to ramp up. And it can provide you with daily income, weekly income, monthly or long-term income. In the US, it's tax advantage. The profits are taxed at a lower tax rate. And at least in the US, you can actually trade it within retirement accounts. Okay, so bottom line, the reason that people really like the Forex market is it provides absolutely positively huge potential for all the different reasons I stated and a lot more. Now, what I want to do right now is I'm going to go to the live charts, and what I want to do is just give you an introduction to the trading market, to the markets. Now, do me a favor, if you can see my charts, do me a favor and just put a C or charts on the screen. I want to make sure that everybody can see my charts. Okay, because I'm having, normally I have a view, and I'm just saying attendees can view, no, okay. I'm just making sure that I can see. Okay, yes, okay, so Margaret, okay, so good, we've got that. Okay, so what I want to do is I'm going to start off from scratch, and this is what we call our charting software. So I'm just going to open up a brand new chart from scratch, and I'm going to go to a new chart, and I'm going to look at the British pound, New Zealand dollar. Part of the reason for this is really moving right now. This is one of the hot pairs, if you call it. So I'm just clicking on British pound, New Zealand. I'm going to go to a 1 hour chart, and I'm just going to hit open. Okay, and that's all it takes to just go ahead and open up this screen. Now, on this screen right here, on the right-hand side, let me just move things just a little bit so you can see that a little bit better. Does everybody see in the middle, it says GBP, that's the Great British pound, New Zealand dollar, so this is the pair, and it says it's a 1 hour. And what that means is every single candlestick, every single bar that you're looking at right here represents 1 hour of time. Now, all I'm doing is I'm just spacing this, make it a little bit easier to see for everybody. So let me just go here. So hopefully you can see this. On the right-hand side of the screen, you see these numbers, okay? And what these numbers mean, let's look at 1.75. What this means is it would take 1.75 New Zealand dollars to buy 1 British pound. That's all there is. Down here in the bottom is time. So for example, right now we have June 27th, and right now we have June 28th, 2017. If you click on the actual candlestick, hopefully you saw a little box, it'll tell you the date, it'll tell you the time, and it will actually tell you the range of that particular candlestick. Now, each one of these bars is what we call a candlestick, and you're gonna notice that it has a high price at the high. Okay, let me click on this one. There's a wick right here, so this is the high price, the open, the close, and then the low. So if you wanna look at it, you can either just click on it to the right, or click on it and have a box, or another way, if you wanted to just take a horizontal line, you could put it right there, you could look, and a number is going to appear as well. So it's very, very easy to work with. The white bars, we call these candlesticks, the white candlesticks represent that it went up, meaning it closed at a higher price. The blue ones represent that it went down, meaning it closed at a lower price. Does this make sense so far? Give me a Y or yes if this is making sense so far. Some of you, if you've ever looked at any type of chart pattern, you may be familiar with that. We have a lot of different tools. Now, one of the strategies, one of the tools that we look at is we look at something called candlestick patterns. And I will be the first one to tell you, I don't have a great memory. Well, there's all kinds of automation. So let's just say I'm looking for a bearish engulfing candlestick because that's the pattern we look for. I can automatically click on it and it'll show up on the charts, or I can do a lot of different ones. There are trend lines, there are horizontal lines. I'm gonna go through and I'm gonna show you this just a little bit. But one thing that we do is our job, if you wouldn't mind, write down in your notes, is our job is to capture pips. If you wouldn't mind, just type in pips in the question box. I want to make sure you get in this. And pip stands for price interest point. Okay? So price interest point. So our job is to capture pips. And you're going to ask, now good, I've got Fred asking, what is a pip? I'm glad you asked. So what a pip is, it's the lowest unit of measurement on the Forex currency. So when you're trading stocks, you sometimes have, you can trade one, they're going to trade like one share, okay? In futures, they call them contracts. In options, they call them contracts, okay? In the Forex market, we call pips. Now, just let me give you an illustration. There is a pattern right here. I can tell you, I saw it already. It's a bullish engulfing, and it's this one right here. So let's just say we saw this. We saw a bullish engulfing, and we're saying, you know something? I want to buy right there. And I'm just going to put a horizontal line so you can see where I'm talking about. So we're talking about buying right there, okay? And I can go through all kinds of different strategies, but let's just say, hey, I think it was going up, it consolidated, and I got out right there. And I'm just going to put another little one right there. So let's just say we got out right here, okay? Just to give you an idea, and I'm going to try to make this a little bit easier for everybody to see, okay? So let's just say you got in this. What does this mean? Well, each one of these candlesticks represents an hour. We've got price here to the right. There's a tool. It's called a ruler. All I do is I click on the ruler, and it's going to measure the number of pips and distance, okay? In the top left-hand corner, does everybody see over here where it says 186 pips, bars 19? Okay, does everybody see that? Do me a favor, type in yes if you see where it says range in pips, 186, and then the bars is 19. So I'm going to write that down because I want to show you what this means. So this would be, it moved 186 pips. Let's say we took this trade, 186 pips in 19 bars, and each bar represents an hour. So this would be in 19 hours, okay? So what does making 196 pips in 15 hours mean to you? Well, let me give you an example of why people like the Forex market so much. We talked about there's pips, there's shares. What we do in the Forex market, the lowest lot size, it's called a micro lot. This is the lowest unit that you can trade, and you can control, you can do a micro lot, you can trade a micro lot with just a $20 investment. And each pip, if you're trading a micro lot, each pip represents 10 cents of movement, okay? So in our example, we had 186 pips equals, that would be $18.60 profit. We said in 19 hours, okay? Does everybody see that? So if you traded on this and you did what's called a micro lot, okay, it would be a $20 investment to control one micro lot. Each pip represents 10 cents of movement. In our example right here, you made 186 pips, so that would be $18.60 worth of profit. So the next one, there's something a little bit larger. It's called a mini lot. And in order to invest in mini lot, it requires a $200 investment, but there, a pip is worth 10 times more. There, each pip represents $1. So again, if you did the same exact trade, you had the same exact analysis, you pressed the same buttons, the only difference is instead of trading a micro lot, you traded a mini lot. Well, now you've generated $186 in 19 hours, okay? Now, okay, and so the example right here, I'd say this would be like one share, this would be like 10 shares, okay, if you're familiar with stocks. But then there's also something called a standard lot, a standard lot. And this is what most people eventually get to. That's what they work towards once they get comfortable doing it. They've grown their account size, and there, each pip of movement represents $10. So doing this again, the same exact trade, that's 186 pips. Now though, it's going to equal $1,860 dollars worth of profit. And again, in the same time span, in 19 hours. Okay. Can anybody understand why people are really attracted to the Forex market? Because one of the things that's really nice about it is you can ramp up. You can ramp up. And what we tell people, start off small. Start off with a micro lot, or you can do 2 micro lots or 3. And we actually have, there is actually a 4th category, and you can set up a demo account, and there it's 0 investment, and you can still trade. You can still get the real life experience, but this way you get comfortable with the system. You get comfortable with the technology first before we do it. So give me a why or yes if this part is at least making sense so far, and if you can maybe see why people are attracted to the Forex market, because part of it is what we call as leverage, okay? It is just an absolutely huge opportunity. And I wanted to give you at least a basic understanding. So let me go back to my charts first, or excuse me, my PowerPoint. Okay, so I already talked about this one, but again, I just want to go through this. This is why it is so nice, because there is leverage. And you can ask, how do you get this leverage? When you open up an account with a brokerage firm, they give you this leverage. It's like, at least in the US, it's 50-to-1. In different countries, it'll vary a little bit. But this is where you can start off with a very small account, and then with and start to have results. And if you look at the example that I did, if you did 186 pips, you did the same exact thing trading the stand lot that you did a micro lot, you just made a lot more money. So it really allows you the opportunity to ramp up. I'm just gonna take a quick drink of water. So one of the strategies you always wanna make sure that you apply when you're going forward is something called set and reward ratio. Hopefully you're familiar with these, but I just wanna do a quick review. Set stands for stop, entry, target. So the entry is the price you get in at something. The stop is protected. In case the trade goes against you, you want to have what's called a protective stop, just to make sure you don't have large losses. And the target, that's where you're going to. That's the profit zone. That's where you want to go to, okay? And we also look for, in all the trades that we teach students on, we teach you how to look for what's called a 2-to-1 or greater reward to risk ratio. And you can set your own individual rules. We help you set what we call as trade rules. But for me, for example, I'll never enter a trade unless the reward is at least 2 times greater than the risk, okay? And just to show you how we call this a 2-to-1 reward to risk ratio. So the risk is the distance from your entry to the stop, and the reward is the distance from the target to the entry. I'm gonna guess that many of you are familiar with this, but say you're risking 100 pips on the risk side, then your reward should be 200 pips or larger, okay? So hopefully this is just some basic information, making sense. What I want to do now is I want to show you a little bit more of the strategy. So I'm trying to give you kind of a quick introduction. I'm going to open up just a new chart, and I'm still going to do the British pound New Zealand, but this time I'm going to go to the 2 hours. And I forgot to mention how this works up here. Up here, for example, we have the British pound New Zealand dollar. It's also listed here. Here we have the time span, but if I wanted to put this down to a 1 minute, I could put it down to a 1 minute. If I want to do a 15 minute, I can do a 15 minute. If I want to do a daily chart, I can do a daily. I'm just going to focus in right now on a 2 hour. Now, we have some different tools, for example. I know one thing that people told me is that, Steve, I'm very bad at drawing a trend. And you can either draw the trend by hand. Let's just take a look at this as an example. But we also have what we call is smart tools. So we could trade a smart trend where we let the computer do it for us automatically. Now I've got this really close. I got to get this closer so I can click on it. So when you click on the tools, let me get a little closer. Normally I have this a lot closer, and I have to remember to hit the right one. So it will show you the different trends. It will show you Fibonacci. It'll show you some different aspects. But what I want to do to begin with is we use, one of the strategies that we use is focused on Fibonacci. Do me a favor, type in Fib, F-I-B, if you've ever heard of Fibonacci's before. And when I go into this, I want to explain to you what it is. There's a gentleman by the name of Fibonacci, and he is a 13th century mathematician, and he discovered in nature that there were numbers that repeated themselves over and over and over again. And it doesn't matter if you're talking about in nature. You can find out if you want to count on how many petals there are in a flower. It is a Fibonacci number. If you want to know in a pine cone how many rows and columns, it follows this magical formula of Fibonacci. You can look at it. You can look at it in nature. You can look at it in art. And the distance, for example, from the eyes to the nose to the mouth, it follows this pattern. If you want to look at animals, the shapes of shells, you look at the trunks. Everything follows this magical formula called Fibonacci. And what we found, our founder of our company, he discovered many years ago that the market also follows this Fibonacci wave pattern. And he did not have technology back then. He had to do it the old-fashioned way, where he had to do it, draw it out on paper and had to calculate it. It would take him a long time to do a calculation. Today we have automation do it, but the market will make higher highs and higher lows. You maybe have heard of this before. Let me just make sure I've got my tools on just the way I want them. So the market's going to make higher highs and higher lows and higher highs and higher lows and higher highs and higher lows and higher highs. And then you're going to notice that the market retraces, okay? And then it reverses direction and then it starts to go down and it does the same thing, okay? Would all of you agree that the market does not follow a straight line? It goes in waves, okay? So what we've done is there's a Fibonacci tool. And we start at this bottom, we start at the beginning of the trend, and we call that A, okay? And when it makes this first high and retraces, we call that our B, okay? And where it comes down and retraces, this is what we call as our C. And then when it makes that new high again, this is what we call as our D, okay? So this is what we call is A, B, C, D, okay? So that's what this is. So we could draw on the Fibonacci the way that our founder had to do it, or now we just use a tool. It's called the MTI Fibonacci retracement. We just call it the Fibonacci tool. All I do is I click on it. And I'm going to take you to live market, but I just want to show you right here. All we have to do is just put it on here. Okay, just draw it to the A and the B. So we go at the beginning of that trend where the A is to that high before it came down, and that's our B. And hopefully you see different colors. You see red, you see blue, you see green. Okay, and the way that this works, is as follows. If this C down here, if when the market comes down, if it retraces, let me go a little bit thicker so you can see this. When the market comes down, if it comes down and retraces, reverses direction anywhere in this area where you see these red lines, then we expect it to go down there, and then we expect it to go up to this red line up here. This is called the extension, okay? So it's red to red. But if the market, for example, goes down to this blue line down here, then we would expect it eventually to come up here to this blue line. And if it comes all the way down to what we call this green line, or the green zone is what we would call it, because it went down further, it's not going to go as high, we would expect it to go to this green line, okay? Give me a Y or yes if at least that basic makes sense. So if it goes down to the red zone like this, okay, we would expect it to go up to the red zone up here. Let me show you this way. So we would expect to go up here. If, for example, though, it goes down to this blue zone down here, then we expect it to only go up as high as this blue line there. And if instead it goes down to this green zone down there, then we expect it only to go to this green line right here. Give me a Y or yes if that part's making sense. Okay, so I see quite a few of you. Good. So this is the basics of Fibonacci. So what happens is we teach you the specifics of this. But what happens is we have some basic rules. We have some strategies. And everything we teach you is follows what we call is a rules-based strategy. And after the market comes down here and retraces, and we have rules for that, there's going to be a point we're going to look for. We're going to teach that. We use our candlestick formations that once it retraces and goes up, we would get in here, and then we would expect it to go up here. And sure enough, using this example right here, it did. It hit right here. And as soon as it hits right there, we would get out of the trade. And once it comes back down, it forms this new C. The old CD becomes a new AB. Now, if this sounds complicated, this is it. This is as complicated. Goes down to the red zone, retraces, and we expect it to come up here. It does. Once it hit it again, we put on the Fibonacci again. It does it again. Now, I am showing this manually. And Margaret, thank you so much. And Ron, thank you so much for the comments. I am doing this manually, but you don't have to do this manually. I'm just showing you right now to have you understand the basics of it. And when the market reverses direction, this also works on the way down, okay? See right here, it goes to the right, and then you do it again, and it works again. So it doesn't matter if the market is trending up or it doesn't matter if the market is tracing down. But Fibonacci is one of the tools we use. It's been incredibly powerful. And let me show you. I'm going to go back to my live charts now. I'm going to scroll down here. Okay. And what's nice about the charts, it's very powerful. It's a very powerful tool where you can do many things. Now I'm just going to expand back out here. And one of the things that I said before is you go down and you look for that low. Okay, you go down and look for that low. So down here, does everybody see this low down here? Okay, if I zoom back out, you're going to see right here, and I'm just going to point to where I'm talking about, right here. Everybody see that low? So that's when the market had turned. We can go back, we can look at our charts, and we can see that as the low. Okay, now I could go in here, okay, and I could do something like this, and I can scroll in. I guess I'll do this the first time just to show you if you wanted to do this manually. Okay, you can go in there. We have up, we have down, and I can put the first Fibonacci on something like right there. We made it. Great. We got it in the next trade. I see it. And then I go in and I put on the next Fibonacci. Great. And then I do it again. You know, so every time the market makes these higher highs, we can go in and we can set the Fibonacci again. I'm doing this all manually. But if there were a way to have it do automatically, would that be a neat approach? And the answer is yes. So we have a tool here called the Smart Fibonacci. So all I'm going to do right here is we've got the Smart Fibonacci. I'm going to put it on here. I'm going to go down here to this bottom, and I'm going to click it on. And here's what happened, okay? Now, no matter how far the market is, if you are unfamiliar, if you're uncomfortable drawing the lines, the technology is going to draw it all automatically. And if you look at this trade right here, okay, we saw it went up. It came down to the red zone, and we expected it to go up to this level right here. Okay, we expected to go right there, and now let's see what happened. Okay, and it hit that level about pretty quick. It hit it right here. So right here is your first profit zone. So right here is the first profit zone. We got into the next trade. The Fibonacci is there. We expect it to go up to here. Okay, and now let's see, we put on the trade, we wait, and there it is. It got us in again right there. So that's one trade in a row worth of profit, two trades in a row worth of profit, okay? We now have the third time in a row, okay? We saw right here, let me just show you, right here, it got down to the red zone. So now our expectation is it's gonna go up to the red line, okay? That's our expectation. So let's see what happens. We put on the trade. And does it get there? Boom. Oh, we're just about there, and it does finally right there. So now we have 3 trades in a row where we took profits. Now again, after that third trade, you repeat the process. We have our AB right here, comes down to the red zone. Okay, so we have 3 trades in a row. Now let's see what happens. We have, it came down here, great. We're looking for our profit zone again. So it came down to the red zone down here. We enter the trade. We have 4 in a row, or let's see if we hit it. Not yet, and we hit it right there. So now we have 4 trades in a row. 4 trades in a row. All we're doing is we're following the waves. We're just following the system, okay? I'm just using the technology and I'm letting it actually go in there. So that was that trade. Now we have this one. Okay, I probably scrolled in too much, but it went down here, went into the red zone, great. Now we're looking for a profit, and it hit it right there. So that's 1, 2, 3, 4. That's 5 times in a row. Okay, that's 5 times in a row. I'm just going to speed this up a little bit right here. We have 6 times in a row, and now finally on the 7th time, it did not hit that, okay? The market moves in waves. It did not go up to here, and we would have had our stop, for example, down here, and we would have been stopped out. So here's an example. We had 6 wins in a row, and then we had a loss. And if we follow what I was sharing before is our basic strategy of 2 to 1. Let's just say on the winning trades, you made 200 pips and profit. And on the losing trades, you would only be losing 100 because we're doing a 2 to 1 ratio times minus 100. Okay, so this is going to equal, this would equal minus 100. This up here would equal plus 1200. So on this series, for example, this isn't exact numbers. I actually think that the numbers would have been a lot higher, but this is an example where it would have been 1100 net pips. Net pips on out of 7 trades. Okay, you won 6, lost 1 trade. Okay, and if you were trading, this would be $1,100 of profit on a mini lot, and most people aspire to get to a standard lot. So this would be $11,000 profit on a what we call a standard lot. Okay, now let's just say you had gravitated, you've got a little bit of experience, and you've done this, and this is just one currency pair. Okay, this is just one currency pair. So this, let me just take a look at when this started. This started. This was back in February 7th. This is an example. Then this right here would be February. So this is about 2.5 months. So this is a one currency pair doing this. So it's $11,000 profit. Andrew asked a great question. Why use a 2-hour chart, a 120-minute chart? You know, Andrew, it really depends on your particular trading style. Some people like the opportunity of setting a longer-term trade, almost what we call as a position trade. They live busy lifestyles. They want to do a set and forget. Fibonacci works really well also on long-term. So for this particular style or this particular strategy, that's just kind of what I looked at. So there's no you don't have to do that. That's something that a lot of us will look at. If you don't have a lot of time, it really comes in handy to find these great trades. You can have great wins, and you can keep on going from there. Now, on the way down, I'm going to do this a little bit quicker. But somebody was asking, hey, does this work on the way down as well? Well, it does. If you want to use the Fibonacci tool, if I can get this in here, normally you start this at the beginning, but here we have 1 trade work, 2 trades in a row, 3 trades in a row, and right now this is bringing us to the live market right now. This is the live market right now. So we've had 1 trade, 2 trades, we've had 3 trades in a row that already worked. Okay, we do have our what we call is our ABCD. Let me just put this on and I'll try to show it to you. And I'm not trying to win anybody over in this particular strategy. I just want you to understand. Actually, what I want you to do is look at the tools, the trading platform that we have right here. So we have our we have our up, and then we have our, we're looking for this pattern. We're looking for it to go back down here eventually. Okay, so this is an example where we can use the strategy. We can put on what's called our candlestick formations as additional tools and enhancements. But I know some people were asking about some of the other tools, and let me just back up. I'll go to a different part of the chart, for example. And one of the things that we look for is called breakouts. Okay, there's all kinds of really neat tools that we're going to look for. For example, let's just say you see this down pattern right here. Okay, and you are looking to enter it after it breaks out. Okay, I'm going to change this to blue. I like my trend lines blue. Okay, and you see this and it breaks out. It finally breaks above it. Now you could just wait here and watch it, but you can actually send an alert. I can click on here. I can add an alert automatically right to the chart, so then as soon as it goes into this, you can cross over it. And so this is a nice tool that you can do. Okay, and I'm asking somebody, so yes, just let everybody know it is live. I am seeing all the questions, so please do keep them coming. Okay, and then you can do lines, you can do parallels, we do support, we do resistance. There's a wide variety of different tools that we have available. So what I wanted to do first off is just show you a little bit about the tools. Okay, we have, if you look under help, we have something right here called tutorials. Okay, I'm going to show you a different spot of tutorials, but there's a wide variety of different tools that show you how everything works. So this is a very it's kind of like any other tool. Once you learn how to do it, it is an amazing tool and such. So what I wanted to show you today is a combination of both tools and strategies. And I showed you just one strategy that we utilize using the Fibonacci. Now, this is a great way to look for entries in the market, but there are some other opportunities we look at. We use the candlestick patterns. We might look for a trend line break, okay? Now, what I want to do is I'm going to go back to my my slide deck. Okay, so we showed you just the basic ones. There's also one of our top, actually, he's probably our top trader. He's a trading expert. His name is Joshua Martinez. Okay, and what we're going to be doing today is we want to introduce the charts to you. We want to introduce you to the trading software, just to look at it, to play around with it, to kind of what I did on there, and we want to make it as easy for you as possible. And we're going to throw in some extras. Okay, we want to throw in some extras. Now, there's a gentleman, his name is Joshua Martinez, and he's been, let me kind of tell you how he started. 8+ years ago, he was a physical trainer, okay? And that's what he did, and he was working lots of hours, not making a lot of money. And he got sick and tired of being sick and tired, and then he started to take on the trading through the Forex market. And he did not have a lot of money. He was not very rich, and he started with a $500 account, and he started with very small, very basic trades. And all he did is he just had that one account, that was it. And he slowly but surely started to grow the account. And if you can look on the slide right here, he turned an initial $500 deposit, and he generated over $39,000 of profit, okay? He has made thousands of dollars on Forex. He's made thousands of pips. He's an accomplished author. He's a speaker. He's a full-time trader. As a matter of fact, one of the items that we actually have, people have the ability to follow his trades if they wish to with MTI. So this is a little bit of his track record. So he's had just an amazing track record. The reason I'm sharing this with you is I'm going to provide for everybody one of his strategies. It is called the London Daybreak strategy. I'm going to give it to you as a bonus, okay? I'm going to give it to you. If you just try the charts, we're going to give this to you as a free bonus, okay? It's going to come with the training video. It's going to explain anything. And let me just very briefly talk to you what the London Daybreak strategy is, okay? London refers to the British pound. And at daybreak, when they open on, it's a strategy that you can utilize using these 6 pairs. So the British pound, Canadian dollar, so it's the British pound and the different currencies. And the goal is to look for 50 pips a day on each one of those currencies, and you can do that 5 times a week. So you literally have up to 30 different trading opportunities every week. Now, you don't have to take every trade. You don't have to take any one of them. Okay, but we're going to provide you with all the specifics on it. We're going to give you the details. We're going to teach you this. There's an instructional video that's going to go through all the details on this, okay? And this is just one of the students that said this is relatively recently, just a couple weeks ago. Frank said, hey, I have to tell somebody. So I came here, just like everybody that's here right now. Yes, he's the son of the FX chief. You got it, Mike. Does anyone actually, but Mike, I'll let you tell you, he did not follow in the footsteps of his father to begin with. He did his own thing. He was not tutored. He came back only 8 years ago. So it's a powerful story. If you ever get a chance to talk to Josh, it's a powerful story. Okay. So anyway, here's what Frank said. Does anyone actually pay attention to the London breakout session? I still can't believe this gold mine. 60 pips per currency pair for British pound. That's roughly 400 pips a week. Can't believe this stuff is real. Is for real. Sometimes maybe we need a course on just the success. So he was talking about the success that he had. He showed some of it. So this is a real strategy. This is one of our students that's talking about it, that's doing it. So what I want to do is I would like everybody to do a trial on the software that I showed you. It's called the Ultimate Charting Software. And in this, you're going to have access to that Fibonacci tool that I showed you. We have all kinds of additional tools that we teach on. There's the trend line, the King's Crown, the candlestick tools. You could have the alerts that I showed you. You can have alerts emailed to you or texted you. You can trade directly from the charts. You could actually link in your own trading platform directly to the charts, so you can actually trade directly from the charts. We also have what's called cloud-based workspaces, which means our expert instructors, our expert traders will load these workspaces into the software essentially, and you can download them and put them right on your charts. And we have many students that just trade right off of that. And right from this, you can actually do demo trading. So if you set up an account, you can set up an account, probably takes you 2, 3, 4, 5 minutes, okay? And once you're doing it, everything that I just showed you, you can do, and you can actually set up a demo account where you can actually trade and you can actually measure your results. And from the charting software, we actually have auto trading. Okay, now you have to learn how to do that. I don't want you to just jump on automatically, but you have that. So here's what we'd like to do. We'd like everybody to try it out for 7 days. Okay, we're giving you a 7-day trial for less than the cost of a pack of gum. And in this trial, you're going to get the things that I just showed you. You're going to get the auto fib functionality, that ABCD tool. You're going to have all the workspaces, things that I showed you. But in addition, we're going to teach you how to do this. Let me bring up a little website. So this is a website. We're going to give you how to get here. But when you go through here, if you see on the right, it says onboarding series. You just click on that. And this is Joshua Martinez, the same person that I introduced you on. And each one of these videos is anywhere from like 2 to 4 minutes. So it's going to do a brief introductions. It's going to talk about how to enter the market, how to close out the market. We're going to give you, to begin with, everybody who does this trial, we're going to give you 3 workspaces. So the charts, we're going to give you the templates to go ahead and try around and kick around. We're going to show you how to use the Fibonacci just like I did. Then that's just the onboarding. Then we have different lessons. So lesson 1, getting started, navigating the settings, using the tools, how to create custom indicators, how to use the auto fib, okay? How to link it up. If you have a brokerage account, we're going to teach you how to link it up directly. That's the first part. Then we have lessons 6 through 10, okay? How to back up your information, how to save it out, how to deploy a system. Some of you want to trade a trading system. You can do it. You have the capability to do what's called auto trade. You can download things. You have all the different tools. And then on top of that, here's what we're going to throw in. We also have specific, we're going to do, everyone who decides today to do a trial, tomorrow at 10:30 Eastern, we're going to give you a free live webinar. We're going to talk about this. We're going to look at a trade. I don't know if you already have a live trading account or not, but you could definitely trade this, what we say is live, or do the demo account with it at the same time. And then we're also going to give you right here, the London Daybreak trading strategy. We go into all the details. This is an in-depth video. You can watch it over and over and over again. You can watch this as often as you want. So when you try the 7-day trial, everything that I've showed you is what you're going to be getting. Okay, everything I've showed you so far. So you're going to get that full access. Okay, now the ultimate charting software is normally only available to MTI students. Okay, it's part of a package that we call as the Ultimate Trader software. Now, the students normally pay $249 a month for the charting software, for the Ultimate Chart. But for the people that are here on the Investor Inspiration, we have a very, very special offer. This is huge, everyone. This is absolutely huge, and I wish I could have you clearly understand how big an opportunity this is, how large an opportunity is. This is absolutely huge. You can try this out for 7 days for just $1. Okay, that is for less than a pack of gum. You can try it out, and you don't have to keep it. But afterwards, if you want to keep it, it's just $59 a month, which is almost 80% off to do that. And we're going to throw in something that we call as the 3 action-free bonuses. We're going to throw in the templates. So let me do this. I'm going to do my best to. Renee, I don't know if you have the capability. I thought I did here to copy and paste the link here. Otherwise, I've got to go on a different page. But let me put this into your chat box. I want everybody to be able to get this. Okay, so so what I'm going to do, thank you, Renee, I'm going to provide this for everybody over here. Okay, did all of you receive in your question box a link that shows it's something like http://bit.l and it ends with June 28. Give me a Y or yes if you can see that in the question box. I just wanted to make sure we did it. Renee put it out in what's called the chat box. I did also try to put it in the question box. I just want to make sure that everybody sees this. So this is an incredible opportunity. So to get it, all you would do, so good, Ahmed, I see you. Soch, I see you. Ted, I see you. This is an incredible offer. Literally, I'm going to say try it for at least $1 for doing it. Let me go in here and show you. And if I've got questions, let me come back here. So all you do is when you click on that link, it's going to bring you to this website, okay? And all you do is you fill out the information, okay? Your zip code, your name, you know, today's payment, it's $1. All you do is go in there and you click pay now. That's all it takes to go in. It's a very simple process. And then everything that I showed you, you will be getting it through that. Okay, it's 7 days, not 30 days. Did I say, I apologize. If I said 30 days, I apologize. I might have made a mistake. It's normally $250 per month per 30 days, so I probably messed up on it if I said that. It is a 7-day trial that you get it for $1. If you want to keep it after that, you don't have to, but if you want to, that's where it's $59 a month, okay? So I probably misspoke when I said something if somebody said that. So you get it for a week for $1. So all you do is you fill that out, and you're getting all kinds of bonuses. You're getting all kinds of extras. So again, all you do is you fill out this form, very, very simple. It's $1 US, okay? And for $1 US, here's what's gonna happen. You're gonna enroll in that ultimate charting software. You're gonna get it for 7 days, okay? You're gonna get those videos that we talked about. You're gonna get the trading videos. You're gonna get that London daybreak breakout or daybreak strategy, okay? If you want to, you can. If you want to set up a trading account, you can set it directly into there. You can do a demo account. You can actually start practicing right away. So literally, you can try out the Ultimate Charting software for 7 days, and you can attend. We have a live trading class that is tomorrow. So if nothing else, I'm telling you, just to get the training, just to get the class tomorrow, that's going to be an hour. Now that I've given you somewhat of an introduction on MTI in the background, that hour is going to be focusing in on the charts and finding a trade, okay? And when I look at this from an investment perspective, you're getting, so it's well worth over $1. What our goal is to try it out. And the reason we do this is we feel very comfortable that if you get on to the site, you move it around, kick it around, you're going to be able to make a decision. Is this something that you like or not? Chris has asked, you know, can you get Forex feeds and stock feeds? Yes, you do have the capability. Let me just show you. That's a great question. So when you open up the charts, you have Forex mode, you have a stock mode, and you have a favorite mode. So yes, you can use the charting software for the different investments. So we have Forex, we have stocks, we have favorites. You can do the different time spans right here. I actually have some templates set up right here. So yes, this charting software can work for different aspects as well. Thank you for asking that question. That was an excellent question. I apologize for not explaining that. And let's just say you get into it. Okay, yes, so Chris, what I just showed you, yes, you get that feeds, correct. Let's just say you get into this, and if for whatever reason you're not satisfied, okay, you're unsatisfied for any reason, just call and cancel. It's a very, very simple process. If you want the phone number, if hopefully you've already tried this or you're looking at this, but all you do is just call us at this phone number, or you can send an email to us right here. So again, the steps to get started is as follows. Okay, you would enroll in the Ultimate Charting software for the 7-day trial. Okay, you would click on that link. Okay, you get access to the video training. You get access to the, if you want to hook up a live feed, you can do that right away. You can start practicing right away. Okay, you can try out the Ultimate Charting software for the next 7 days. You're going to attend the live training that is tomorrow afternoon. Okay, and this is an investor inspiration special where you can try out the 7-day trial for $1. Okay, and after the 7 days, if you want to keep it, fantastic. If you don't, no obligation to. But again, I'm going to probably, if you haven't seen it yet, I just want to make sure. All you have to do to try it out or to get the information on it is just click on this link. I'm going to put it in here, and you might want to copy this right now. You might want to copy and paste it, because when we close down the webinar, you won't have access to it. So if you're considering it, I would just say copy and paste that link right now and go ahead and go into that and take a look at it, okay? Now, I want to see if there are any other questions, because I want to be respectful with it. Okay. Douglas is asking, what software can the charting software interface with? We specialize in the Forex market. So if you're looking at Forex.com, Oando, and such, you know, Douglas, here's what I'm going to suggest. Which one do you have? Douglas, if you're thinking of one in particular, rather than me trying to go off a long list of what it has, if there's one that you're looking at, or if you wanted to, what I would say is it might be easier if you want to call us, Douglas, maybe that's the phone number to go ahead and call, is to just go ahead and give us a call, and we can let you know. There's so many different platforms out there that I don't want to go down the list and find out that it doesn't have it. That is, let me look at it. So it depends on when you're looking at, okay. So yes, once you are in the trade, you can get into it and set it up as what we call as the stop, the entry, the target. So so the question is, can you auto trade the London daybreak strategy? And different people mean different things when they mean can auto trade it. Can you set it in a week in advance? You probably don't want to do that. So it kind of depends on what you're looking at. When you look at the video, it'll go into more details, and I think that'll answer your question. Douglas, what I would say is if you look at the phone number, probably the best thing is just give us a call, and we can let you know the specifics of how that one works. So last time again, if you enroll, you get the 7-day trial. We're going to give you a special strategy just for our way of saying thank you. Even if you decide not to keep it, you've got all the great training, you've got all the education, you've learned probably a new trading strategy called the London daybreak strategy. You've got that. And you're going to have that. So I'm going to just leave this slide on right here for a couple more minutes. Okay, if you have not yet done so, but if you are looking at this or you're interested in this, just type out or copy and paste the link that I posted to you and give it a try. You know, for $1, to try it out for $1, I can think of different things over the years that I've spent $1 on, or a lot more than $1, and did not get value. If all you did was open it up, try it out, and went to the training, look at Josh's training where he talks about the strategy, or go to some of the different trainings where it talks about Fibonacci, where it talks about trend line breaks, where it goes to that. It's definitely well worth it.